Hi, good afternoon, everybody. I'm Carlos Domingo. I'm the co-founder and CEO of Securitize.
I'm Guy Young, the founder of Ethena.
All right, so we are coming here together first to welcome you to the event that we co-organized with the friends from Wormhole, but also we wanted to take the opportunity here to introduce a very exciting project that we've been working together with the Ethena friends. So Ethena, first, just a quick intro from Guy.
Yeah, sure thing. So Ethena was formed around 2 years ago now, and we came out with our first core product around a year ago. In that time, grown to around $6 billion in assets, so that was one of the fastest growing dollar-denominated assets in crypto history. And the core product idea was essentially trying to create a dollar-adjacent asset which used derivatives to delta hedge crypto collateral, and that allows you to issue what we call a synthetic dollar. You can think about this as like a tokenized cash and carry that you can use in different formats as collateral in the same way that you do with stablecoins. And after that initial first product, we also came out with a second one called USD-TB, very similar to the normal stablecoins that you see in the market at the moment, and that was in partnership with Securitize. So that's grown to around 800 million in assets in the last few weeks. And in that period of time, we as Ethena have become the largest holder of Carlos's product. So some of the big ambitions that we have this year is really thinking about how do we take the existing product set that we have at the moment, which is very much focused on a DeFi and crypto-native user base, and really open it up to see how we can deliver these products for institutional users and investors that live outside of crypto right now. So excited to sort of share the plans that we have with Securitize through this.
All right, quick intro from our company. I founded the company in November 2017 and launched in 2018 when RWAs were not even called RWA. That terminology didn't even exist. And it's been a kind of like a long journey for many, many years when this part of the space, tokenization and RWAs, et cetera, was not the popular thing. But the narrative has changed the last couple of years for a variety of reasons. I think first, institutions have really embraced the space. Companies like our customers like BlackRock, Apollo, Hamilton Lane, KKR, and some of the native crypto funds like Blockchain Capital, Parafi, et cetera, have embraced the tokenization concept, partly also because we as a company have done all the hard work in between of not only building the tech stack, but also getting all the necessary licenses and all the the regulations that we need to be able to serve these large TradFi companies coming into the crypto space. So actually, last week, we exceeded the total AUM of our products by $2 billion. We're more than twice larger than the second largest tokenization platform in the space. We have the largest asset in the industry, which is also the largest tokenized fund, which is built and in partnership with BlackRock, which is at $1.2 billion now. We have the largest tokenized equity project, and with Exodus, which actually, I was talking to JP, their CEO, this morning, is already $290 million because their stock price went up, and this is a very interesting project because we manage a publicly traded equity as well as a tokenized equity simultaneously. And finally, we have the largest tokenized institutional fund with Blockchain Capital, which was one of the pioneers in the space. All right, so what do we do? So we basically sit in between issuers and investors. So issuers are people that have assets. We are not an asset manager ourselves, as opposed to many companies in the tokenization space. We are basically the bridge between professional asset managers that have interesting assets that they want to bring into the crypto system. I have a number of licenses and enablers like investment manager, transfer agent, fund services, et cetera. We launched in Q4 last year. And then we have a broker dealer that allow us then to sell these tokenized assets down into the crypto ecosystem through a passport product called Securitize ID that has more than 500,000 accounts, and through a connectivity with the registered investor advisor markets, as well as with the ability to provide lending against these assets through the Securitize credit product.
So Carlos and I were ideating on different ideas that we could sort of expand the relationship that we had built with the USD-TB product, and sat together really thinking about what is it that blockchains are actually used for today, and actually have product market fit with the current user base within the market today. We came up with two simple answers. You really have speculation on one side of the market, which is the meme coin trading on Solana or the derivative trading on Hyperliquid. It's really swapping as the core function that you sort of find for the settlement on those blockchains. And then we saw a different category, which we think is important today, but is actually the one with a larger growth opportunity ahead of it, which is really the settlement for digital dollars, stablecoins, and tokenized assets going forward. The former, we think, is extremely competitive right now, and there's actually a really interesting design space for us to try and build something that's actually purpose made to facilitate that second use case. So I think coming together with the two different brands and businesses, we're really sitting on opposite ends of the spectrum where you have Ethena on one side with a DeFi native sort of background, crypto native assets that we're trying to export out into TradFi. And then you have Securitize, which has done an amazing job of bringing TradFi native assets into crypto to make them more useful. And really what we're trying to do here is bring together those two pieces to provide what we think is going to be a really interesting opportunity to facilitate those settlements of tokenized assets.
Good. So for anybody that knows me and has heard me talking about this space, I think there is a reason why tokenization and RWAs didn't take off a few years ago. And the main reason is that it was at the beginning perceived that as I take my securities and then I put them on a better ledger. So blockchains are better ledgers. They are ledgers at the end of the day. They are public distributed ledgers. They're cryptographically secure. They're definitely better than what people use in traditional finance. But just putting things on a better ledger doesn't make the asset necessarily better. This is more of an efficiency for the asset manager and other people. And what has been missing in the industry is how do you make these assets that are on a public blockchain and that they're tokenized a better asset that can actually do more things and has more utility than the same asset when it's just sitting on a centralized ledger, behind the ring fence of a bank, et cetera. And if you think about where the utility comes in crypto, it comes primarily from DeFi, right? DeFi is what brought utility to digital assets. It's what allows you to do lending in a very simple way. It's what allows you to do swaps between assets. It's what allows you to do automated market making and all these utilities that have made digital assets grow. And at the same time, the DeFi ecosystem sits today at $100 billion. But if you look at how capital markets are, where all these other assets sit, it's $100 trillion. So there's a massive gap between the two spaces. And then what we're trying to do here is to basically take traditional capital markets assets, put them on tokenized form, and then make them useful within the DeFi ecosystem. And that's not a simple thing to do because DeFi was natively defined to be permissionless and anonymous and to work with assets that are freely transferable to anybody, et cetera. So marrying these two worlds is actually a complicated thing. What our expertise is basically how to take TradFi assets and put them in the crypto ecosystem, and Ethena's expertise is how to make DeFi more useful. And then we decided that bringing those things together and in our own settlement layer was the way to actually make DeFi go from the $100 billion that is now to trillions of dollars and make the $100 trillion of capital markets to move fully on chain. All right, so what we're announcing today is the following. We're going to launch a new chain together between Ethena and Securitize called Converge. This will be the place where RWAs and DeFi will converge into the same thing that will make grow both the RWA market and the DeFi markets to an order of magnitude bigger than that.
Yeah, and I think to just expand on Carlos's point, I think we also just had a look at really the growth of DeFi relative to the market in the last cycle during 2021. So today, assets that are sitting within DeFi are actually well below the peaks that you saw in 2021. That's with Bitcoin being almost twice the market cap that it sort of peaked at in 21, and then stablecoins more broadly adding more than $80 billion in that period of time. And I think the conclusion we came to was we really have no interest anymore in just shuffling the same chips between each other. I think a lot of the new applications, new chains, really we're just kind of moving money between the same boxes in different places and not really thinking deeply about how do we deliver these products in a meaningful way to new pools of capital that are from outside the system. We also think that this is the biggest theme of this entire cycle, which is really ETFs coming to the market and real institutional flows coming through that vehicle into crypto. But we don't really have many more conduits through which real dollars flow in from the real world into the crypto system outside of these ETFs. And so really what we're trying to do here is take crypto native assets, package them up in a way which is compliant and TradFi can actually interact with, which we're going to expand on a bit later in terms of the applications that we're building on here. And then also finding a way to take TradFi native assets into this shared settlement layer and then wrapping all of the great things that we have around DeFi, whether it's money markets, trading, settlement, and that sort of like increases beyond just the initial scope that Securitize has sort of launched their products with now. And I think that was one of the pieces that we got really excited about was just hearing the ambition that Carlos and the team had in terms of expanding the different types of assets they want to bring on chain. And we really just want to be there as supportive partners to build the financial infrastructure around those assets.
Good. This project will not be possible only between Securitize and Ethena. I think this is an ecosystem that we're trying to form here. So both companies have worked the last few weeks to bring the best-in-breed partners for the launch of this new chain. So Guy, can you introduce the Oh, sorry. Forgot that there was another slide. So I think that we've already discussed this about how the two companies come together. So Ethena with their native DeFi assets, with one of the largest, fastest growing asset, and us with all the RWAs. So we're bringing this together, and it will be fully integrated in the chain. But as I mentioned, besides Ethena and Securitize, you also need, a new set of partners that will come and make this a reality. So, Guy, if you want to explain the first set of partners here.
Yeah, I think this is something that looks quite unique to what we're doing on the chain. So I think the world as it exists today, you have permissioned assets, which look like securities, some of the assets that Carlos is bringing to market. You have permissionless assets, which is Ethena's first core product, and most of the crypto assets that you see within DeFi right now. But you really have this problem where a lot of the financial applications where you can put permissionless or permissioned assets are totally non-KYC, totally open, and just not delivered in a format where TradFi can actually come in and interact with it in a meaningful way. And so really what you're going to have are three different buckets of applications that sit within the chain. You have fully permissionless DeFi, which is where Ethena sort of started and has a huge amount of critical mass from its existing deployments on ETH-L1. We're going to be bringing that critical mass to the chain on day one so that you have the existing permissionless DeFi coexist really with this new layer of applications, which you can see on the screen today, where we're essentially taking the same sort of ideas and products which we know found product market fit, building around our assets, and then putting permissioning and KYC layers on top of them so you can actually have TradFi interact with these protocols in interesting ways. So very obvious examples you got here with like money markets. At the moment, you see leverage where people are levering up or looping some of these assets within DeFi. What if you could start to plug in investment banks, retail banks on the lending side when they actually know who's on the other side of that leverage? And I think that's one key area here where both of our assets can actually fit in and sort of broaden the set of different participants that can come in. And then other examples you can see with Pendle, for example, was one of the huge success stories that you saw within DeFi in the last 2 years. One issue there is that when you don't know who's on the other side of a PT, which is the fixed rate product that Pendle produces, you can't really package these things up as fixed rate products to then export out into TradFi. So we're really just taking the concepts that we know work, that we know find product market fit already, and then putting them in a format that we can actually deliver it to new pools of capital.
So besides applications, you also need infrastructure partners because all our assets are institutional, and therefore we need institutional-grade tools to make a new ecosystem a reality. So besides the partners that Guy has mentioned, we have selected the following partners to support us on the launch of the new chain. On the Oracle side, we will be supported by Redstone and Pith. On the cross-chain interoperability, Layer 0, which has already been supported Ethena, and Wormhole, which is our partner for expanding the assets across chains. So the assets that are in Converge will actually be able to move across other chains thanks to the Wormhole protocol. And then we also need institutional-grade custody and key management. So the key partners that have supported us in this endeavor so far and that are coming also into this new project are Anchorage Digital, Copper, Fireblocks, Komainu, and Zodia. So that's it. This is the announcement. There's already a long tweet thread where you can actually see more details. You can go to our website, convergeonchain.xyz, so you can see the launch information. We are planning on launching this live in Q2 this year, so we've been working on this project for already quite a time. And then we'll be telling you more about the project every other week leading up to the actual launch. But if you want to know more, you can just go to Converge or Chain or follow Converge on Chain in X. So thanks for coming. Thank you.